Deere Company shares pushing higher after a beat on the top and bottom line in its latest quarter as the company raises its annual profit forecast. Here to discuss is Stanley Elliott, Stifel Machinery and Construction Materials Analyst. Good to have you on the show here. So I want to get your takeaways. You obviously have a buy rating on the stock, a price target there of $402.96. What were your biggest takeaways from this report?
Yeah, I mean, looking at the momentum that they're seeing right now, as you mentioned, both the top and the bottom line beat. You think about what's happening across the overall landscape. Many of the markets that we're seeing in some of the earnings reporting so far really have not been this robust. And there's a lot of things contributing, we think, to Deere's outlook for this year, and we think that can continue into the coming year. You know, you think about the business with the precision production ag part of the market, the large ag professional farmer, we still see that as an opportunity for them to adopt technologies, as well as the fleet within the industry is still rather aged.
And I want to ask you, because they also did, of course, raise their net income to a range of $8.75 billion to $9.25 billion for fiscal 2023. How optimistic are you that they can reach that?
Yeah, you know, right now you've got a lot of tailwinds for the business. I mean, you're talking about double-digit pricing across all of the businesses. You're talking about a supply chain that's starting to improve. You know, if you go back to last year when inflation was as rampant as it has been, the company faced over $2 billion of incremental costs. Those should be winding down. That should be another tailwind. And then within their order book, they exited kind of fiscal 22 with about $20 billion in orders. Right now, the order books that they have are extending into the fourth quarter. Some of it will take inquiries even into 2024. So we think that the outlook is fairly solid right now. I guess the one caveat would be if we do see a disruption or further disruption in the supply chain, then that would put pressure on those results.
And we know a lot of people were wondering what that means in terms of the crop prices. Obviously, we saw the impact of that with Russia's invasion of Ukraine. And so how does that play into the outlook, though?
Yeah, no, certainly crop prices are important, right? And, you know, within that, though, you know, the net crop, net farmer income is expected to be down, but we're still at elevated age levels relative to history. We'd also add that fleet ages are fairly aged in our estimate. You go back to the prior crop cycle and machinery peaked really in kind of 2013, 2014 period of time. We had a number of years where we were producing below what we would consider an average use for the machinery. We're just starting to get to that level. And then you layer on inventory at the dealer level was exceptionally lean. So all of those things should support demand levels into 24 would be our guess.
And how would you say Deere stacks up against rivals like Caterpillar in this sort of environment?
Yeah, you know, it's the farm economy, we think, is a little bit more conducive, right? A lot of the machines are built to order. There's a finite, period of time when everybody is planting and harvesting all at the same time. Within that, they've also been able to adopt technology and been a faster adopter of technology. When you look at what Deere has done, presenting at the Consumer Electronics Show the past 3 years, it's really highlighting what they're doing, what we think on terms of how they're trying to push that technology. They had an Analyst Day mid last year where they're identifying about $150 billion of incremental opportunities above and beyond the traditional machinery spend as you move into helping with farmers with labor, helping cut down on inputs, helping to save costs all along up and down the value chain. And we think that those are interesting characteristics.
And we know also currency headwinds that had played a role for a lot of companies does seem to be easing for Deere. Do you expect that to continue? Obviously, we're not quite sure what's going to happen with China's reopening and the pace of it as well.
Yeah, a little bit hard to say, right? I mean, they did take down their the FX headwinds within that. But look, corn, soybeans, they're all global commodities priced in the U.S. dollars, and so we'll continue to watch that. But whether it's China reopening or other opportunities, weather issues, drought, et cetera, it does have a bearing on what's going to happen with the commodity market.
We'll certainly be keeping an eye on that. We do thank you for joining us. Stanley Elliott, Stifel Machinery and Construction Materials Analyst. Thank you for your time today.